Warning, the following program was produced for traditional broadcast television. Over 12 minutes of commercials have been removed, but interruptions are still included. Thank you for watching.
Bitcoin is up 22% this month versus gold. The Iran war has basically taken over the headlines.
Bitcoin has outperformed stocks, outperformed gold during the war. I think it's material. It is interesting to see. The United States is embracing Bitcoin as a technology. As Bitcoin grows, the United States continues to win. That feeds back into its power projection and feeds back into the dollar system, which I don't think is going away. I think you're in the reset process. No, I don't think it happens suddenly, but there are moments that are sudden in history, such as the closing of the gold window.
Government officials we will continue to inform as this story unfolds.
Welcome to the Money Block with Matthew J. Moore, the Bitcoin-focused program that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
And so, welcome America, welcome world. You are here at the right time, right place. That's right. We are America's Bitcoin-focused program on traditional television, radio. We're all over the place, coast to coast on BizTV. So I just want to welcome all of you Bitcoin newbies, lovers, and experts. This is the program where we have very phenomenal, deep, meaningful conversations about the economy, about Bitcoin, technology, history. We touch it all. So you're here at the right time, right place. And I've got a great guest today. Our guest, his name is Nik Bhatia. He is the founder of a company called the Bitcoin Layer. He's a well-known author. He's also an adjunct professor of finance at USC Marshall School of Business. So you're in for a real treat today. So I'm going to go ahead and just dive right into it. Bring our guest to the stage because we got a lot to cover today. Hope you put your thinking caps on. We're going to talk some macro events. But Nik, welcome to the program. So excited to have you today. I guess I want to start this off here since we have a short first segment. I want to give the viewers a preview of kind of the conversation we're going to talk today. And Bitcoin is up 22% this month versus gold. And the Iran war has basically taken over the headlines. A lot's going on. But what has your attention right now when it comes to the markets?
Matthew, thank you for having me. Yes, as a Bitcoin researcher, sometimes I forget that Bitcoin is also, this fundamental technology, which is how I got into what Bitcoin is and my interest in it. But today, Bitcoin is driven by global macro. It's driven by liquidity. And at the Bitcoin Layer, our whole framework is around liquidity. So what am I watching? I'm watching the dollar. The dollar going up is dangerous for all risk markets, and it going down calms the markets. There's a lot that goes into why that dynamic holds, but the dollar is dominating markets right now.
Yeah, and you're an author of a couple books. Do you mind mentioning those books real quick?
Yes, Layered Money, I published in 2021. Layered Money is an introduction to money, and it explains Bitcoin from a historical perspective, why it is the most similar to gold and unlike dollar money in any way. My second book, Bitcoin Age, published last year, is a much deeper dive into Bitcoin's origins, specifically its software origins and the inspiration from the credit money system, which just cannot help itself, continues to expand no matter what.
Yeah, well, the macroeconomics, the picture that you are describing that you're having to pay attention to, the world economy, the dollar, all these things are a big part of it. And the Iran war, I do want to dive into that a little bit. I know you're probably having to focus a little bit on the effects of that when it comes to Bitcoin and the markets, but we got to run to break. So I want you guys if you're watching this show, be sure to call a friend, have them tune in. And if you're watching online, well, be sure to give us a like, subscribe, comment, be a part of the conversation because, man, we are going to have a loaded conversation today, and I'm really excited to dive into this whole concept of what our guest brings today and how it relates to the macroeconomic events of today. So stay put, stay tuned. We will be right back after this break. You are watching The Money Block. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. It is segment 2, round 2 of the Money Blog. We really appreciate you tuning in because today we got a loaded conversation with a guy who knows a lot about not only Bitcoin, but macroeconomics. He's definitely somebody that I'm so happy to have on the program. He's going to bring some timely information. But before I bring him back on, I want to go ahead and just remind you guys that as we go through this show and we talk about some of these concepts when it comes to sound money or economics, don't feel overloaded, because it's a lot to take in sometimes, especially if you're new to the space. So as a thank you gift, I just want to let you know that I'm going to give away a free digital download of my Amazon best-selling book, Foundations for Liberty. And in that second half of the book, we talk about sound money and kind of these macroeconomic ideas. And so if you want to just get out your phone, scan that QR code that pops up right there on the screen, that's my way of saying thank you. Just download it. It'll help you through your journey of becoming more sovereign over your finances. All right. Well, on the line, we have a guest that, like I said, I'm excited to bring on because we are covering the recent performance of gold and Bitcoin. I know there's been kind of a battle. They've been duking it out over the last year, if you want to see it that way. Some see them allies, but also the Iran war is going on. It's picking up headlines, and could that potentially be part of a larger picture of a macro reset? Are we coming into a Bitcoin age? Well, like I said, our guest today, he's going to answer some of those questions for us today. It's Nik Bhatia. He's the founder of the company known as the Bitcoin Layer. He's a well-known author and also an adjunct professor of finance at USC Marshall School of Business. But Nik, I know before we went to break, we kind of teased a little bit and got your take on what you're watching. You said you're watching the dollar in context of what's going on. But, you know, war is often a blind side when it comes to the macroeconomic picture. What's your current interpretation of Bitcoin's price action in relation to what's going on?
It's been relatively strong, and I think it is impressive, especially with the weakness in the stock market. So Bitcoin has outperformed stocks, outperformed gold during the war. I think it's material. It is interesting to see. I don't like to make a quick judgment here because, like you said, the fog of war, it always makes the information, it's interesting to analyze. I'm obviously not an expert in geopolitics, but part of global macroeconomic study is constantly watching geopolitics, understanding that there can be volatility events that come from places that you can't see necessarily, like the Middle East. I mean, it's always something that pops up, and oil is always responding to events in the Middle East. What the throughput is to volatility in the rest of markets is always less certain. So Bitcoin has performed quite well, relatively speaking, but I want to mention the fact that Bitcoin had a terrible November, December, and January, bottomed somewhere in the early February range as volatility was starting to build up, and way before stocks genuinely rolled over and oil started to take off, and then volatility started to react, just broadly speaking. So did Bitcoin's price action at the end of last year and the beginning of this year precede the liquidity dump that we've had since the war, which is due to volatility? So is Bitcoin an advance indicator, and is what stocks doing right now, which is rolling over? Of course, the headlines are moving things around at all times, but is that simply a delayed reaction to what Bitcoin was pricing in a little bit earlier. I suspect that is the case, and we've seen in the past Bitcoin lead stocks up and down, before or during liquidity events. So that's a thesis that I'm working with, and I would be it's my base case scenario that something like that has happened.
So in relation to, often gold is seen as a flight to safety, especially during times of war. Has it been surprising that, Bitcoin has performed the way it has and then gold has kind of gone down during this time of war?
No, it's not interesting because Matthew, what you really have to do is zoom out and see that gold has doubled over the recent past. And so that doubling of gold is not common. That it's way outside of gold's historical standard deviation of returns expectations. And so when you see a move like we did, basically from this 2000 breakout to way above 5000, now somewhere in the 4 to 5000, range, that's a doubling. It's an overshoot and then a correction, and now you're back to even above the trend expectation, or if you were to compound a few years of gold returns, you're still materially above that type of range. So gold has reacted over the past couple of years to a broad monetary reset, reordering of the global system, death of the World Trade Organization, tariffs worldwide, US China. I wouldn't say that the relationship between the United States and China is bad. It is a trade Cold War, but it also is anchored in a codependency. So there is a strong codependency and a friendship. I think that's underappreciated between these two countries because we get so many headlines, and even I'm writing about the Cold War between these two countries all the time because there is a defense buildup too that is directly targeting each other.
Yeah.
We can't hide around that fact. I mean, that's just absolutely the case. So gold has reacted to all of this reordering over the last couple of years. That is for sure. And gold is a 30 to 40 trillion dollar asset, 30 times or 20 times the size of gold, depending on how you on how you slice it. So gold has been telling us a huge story. What it has done in the last month relative to the dollar price and relative to Bitcoin doesn't give me signal about how gold is functioning and will function in the future, which is it is still a very important global asset, a neutral asset, and price can overshoot, right? So I think that we're in an adjustment here, and I wouldn't make too much of it that, oh, gold has performed poorly in the war, Bitcoin has performed well, so Bitcoin is the future of money and gold is dead. It's definitely not that extreme, and it's somewhere in between.
Okay, well, and I see your point there, and I also, we talk about war being this wild card in this situation, but when it comes to commodities, when it comes to the dollar in Bitcoin, I know we don't have a crystal ball, we can't be totally confident, but is there anything that you have some sort of general directional confidence in where this goes when it comes to those three asset classes?
Well, I think gold won't have a deep bear market, so it'll find some stabilization level, let's say around 4,000, somewhere between 3 and 5. It might consolidate there for a couple of years. This is actually how this price action goes. And then once it builds momentum again, gold is heading to $5, $8, $10,000 over the next several years. I believe that will continue to happen. And on the Bitcoin side, my expectation is that Bitcoin continues to follow its adoption path. It is exhibiting a power law relationship with time. And that's something that has a lot more math to it. But basically, as time goes by, Bitcoin adoption increases. As adoption increases, also the price reacts to this increased adoption. And so my expectation is for Bitcoin to approach and surpass $1 million in the 2030s.
Yeah.
And that is the way that I try to think about markets, even though my liquidity framework is actually 30-day cyclical and zooms way into the picture on what's driving markets in the short term. I like to anchor my framework in the long term yes, I believe Bitcoin is going to $1 million in the 2030s. Those are still outsized returns relative to historical stock market, for example, as well as gold. So it's a special opportunity, and the extreme volatility to the naked eye makes it unpalatable to many. I understand that, but if you get to the education of what it is, and both of my books help you do that. They help you get to the point where you understand what you're getting involved with, and I think that is how I try to lead.
So we've got about a minute before we have to go to break, but you're kind of a big picture guy. But do you think that Bitcoin has bottomed, or a lot of people are calling this a bear market?
I do think that Bitcoin is bottom. I think it's you hear a lot of analysts say, "Oh, well, it could test the lows one more time, but I think we're in a deep value range." Well, that's a sound take, and we could see one more bottom, a lower low potentially in a washout. You do have to call a spade and understand that if in my base case scenario, the downside from here at around 70,000 is 10 to 15,000. Say even 20,000. Say down to 50, it's the bottom, and the upside is 1 million over the next 5 to 10 years. It makes a lot of sense to accumulate here.
I love it. Well, we are going to head to break, but when we come back, we got more great conversation with our guest, Nik Bhatia. And man, stay put, stay tuned. You are watching The Money Block. We have more great content coming your way. And welcome back, ladies and gentlemen. It is round 3, segment 3 of The Money Block. You're here at the right time, right place. That's right, we are coast to coast on BizTV. And man, we are excited about today because we're talking about some macroeconomic related events. We're talking Bitcoin. Is there a Bitcoin age on the horizon? And what about these whole talks of resets and war? I mean, obviously, the Iran war is taking over the headlines right now. But we got a great guest that's going to help us cover some of these topics today. But before I bring him back on, I just want to give you a friendly reminder that I'm giving away a free gift. It is a digital download of my Amazon bestselling book, Foundations for Liberty. It'll give you the principles, ideas, and tools to help prepare you as we go on into, well, some people might say a monetary reset, but sound money specifically. You need to be informed about what sound money is, how it plays a part in your portfolio, but more importantly, times are changing, so we need to be ready. So be sure to get out your phone, scan that, and get you a free download. All right. Well, on the line, like I said, we've had our guest, Nik Bhatia. He's the founder of a company known as the Bitcoin Layer. He's a well-known author. He's an adjunct professor of finance at the USC Marshall School of Business. But Nik, I want to pick our conversation back up here, which is, I want to kind of hit on the war a little bit more. If the war continues to escalate, people are expecting that money printing might be a big part of it because, financing the war is going to play a big part in it. If this were to happen and money printers go burr, as people like to say, would you expect gold to start performing better and just overall assets in general to perform better because of all this new liquidity?
Yes. When you talk about money printers, and what you're really talking about isn't necessarily the central banks. And I think that's a common misconception. It's not that the Fed will print money. And what the war does, I wouldn't say guarantee, I don't want to use that word, but what the war sort of locks in for us is more defense spending, which is, remember, it's the treasury that spends the money into the economy, whether it's on services like Medicare, Social Security, or defense, which is a good, and weapons purchases, for example, salaries of soldiers, for example. So there's a strong wave of liquidity that comes to the market simply when the treasury borrows and spends. And remember, they're not in surplus, so it is debt generated expense. Now, who buys the debt? Is it existing money or is it new money, or a combination? Well, banks, not the central bank, but banks do absorb debt, government debt, and when they do that, it's new money that comes into the economy. And the balance sheet mechanics that allow them to do that is basically when the treasury spends money, the recipient of that spend is the customer of these banks. So they just offset their customers' new money with treasury debt, and the whole system expands because of this. Now, in a crisis, the Fed has come in and bought that debt as well. It winded some of that position down over the last couple years. Now it's building that position back up in treasury bills. So the Fed is on margin right now printing money that goes into the treasury that is spent into the economy. But we have to be specific that it's the government spending money that's the real money printer. Because at some point, the existing money that's buying treasuries does run out, and the banks have to absorb, and in a crisis, then the Fed has to absorb.
You are correct, and you've been talking about the treasury markets over the last couple of days, as well as I've seen on X. But there's this common conception that American debt is becoming less popular, and what happens in this situation? Do you see the American the United States being able to sell their debt in the debt markets as effectively as they have in the past, despite what's going on?
Yes, it is. I understand the quantity of debt and the level of debt to GDP are historically very high. There's no getting around these statistics. However, the $39 trillion treasury market must be put in the context of $348 trillion of global debt. That's the quarterly International Institute of Finance statistic, the latest one that we have. I believe it's 348 or 349. Either way, we're talking about a number that is approximately 10%, slightly above 10% of global debt is the treasury debt. So the question you have to ask yourself is the US treasury debt, in terms of worthiness of holders owning it, is it in the top 10% of global debt? And the question is answered really by interest rates, because that's the price. And we see that the United States has a lower yield dollar, on a dollar in the dollar world than the rest of the borrowers in the dollar world. And on an FX adjusted basis, at the bottom of the global range. That doesn't mean there aren't countries that are lower rate and even FX adjusted that are, the market is saying, hey, this is generally more attractive. So I'm not saying it is the top 10%, but you have to put it in context of 350 trillion, or else you're not really conducting the right analysis. So it's not just, is the treasury market overblown? Well, the global debt market is large. So make your assessment within that.
That makes sense. Well, we got a couple minutes before we have to go to our next break. But a lot of people in alternative finance space, they come off sometimes as alarmists, or they're calls for predictions of a financial reset. Someone like yourself, who's well researched, level headed, and you got a lot to bring to the table here. But does such a reset happen gradually, or is it all of a sudden?
I think you're in the reset process. And no, I don't think it happens suddenly, but there are moments that are sudden in history, such as the closing of the gold window, Nixon in 1971. That was, my understanding, a weekend decision that was very closed door and sudden. It doesn't mean it wasn't necessary. My research does tell me that decision was necessary for the longevity and the health of the United States of America. Other decisions, such as the English decision, the Great British decision to suspend its gold standard in the early 1930s, these are particular moments that reset the world. So it is possible, but there are many more situations where the system does adjust. There maybe is a meeting at the middle. For example, the Plaza Accord meeting in the 1980s. If you look at the chart of the dollar versus its competitors, Japan and Germany at the time before the euro existed, you can track the change in price to that day, but the price adjustment happens over several years.
Yeah. Well,
So it's a combination, Matthew.
when we come back, I want to touch on that more. I want to go a little bit deeper. I know we had just a little bit of time here, but just wanted to kind of tease the topic because I do want to, like I said, follow into that a little bit more, but also this idea of a Bitcoin age, which you've written about in your book, Layered Money. But when we come back from break, we're going to go deeper with Nik. So I want you to stay put, stay tuned. We got more great content, great conversation coming right up on the Money Block. All right, we'll see you guys after this break. And welcome back, ladies and gentlemen. You are watching The Money Block. This is round 4, segment 4. And yes, we are coast to coast on BizTV, bringing you all this great Bitcoin-related content. This conversation today has been great. We've got somebody who knows a thing or two about macroeconomics, Bitcoin. He's been giving us some insightful thoughts on where he thinks things are and where they are going. But before I bring him back on, I just want to let you guys know, as usual, I've got a free gift that I'm offering. It's a free digital download of my Amazon bestselling book, Foundations for Liberty. You can check it out by scanning that QR code right there. You can download it for free, and it's my way of saying thank you for tuning in. Okay, well, I want to pick up our conversation here today on this episode. We have been covering the topics of how gold's performance has been, Bitcoin's performance, and then in this whole Iran war stuff that's going on. I mean, a lot of uncertainty. The markets are worth watching right now, and my question is, there's a lot of talk about resets, talk about Bitcoin playing a bigger role in the economy. And, our guest today, he's written a book about the Bitcoin age. He's also written a book about layered money. But our guest, Nik Bhatia, he's like I said, an author. He's the founder of a company called the Bitcoin Layer. He's an adjunct professor of finance. But Nik, let's pick up our conversation here. Before we went to break, I was kind of teasing the idea with you about, resets and we're obviously in the middle of a transition, a monetary transition, and we're talking about whether it happens slowly or whether it happens suddenly. And you made the point that there are points in history where sudden things happen, but we are most likely in the midst of this transition right now. Is this bringing us closer to what you would call a Bitcoin age?
It is, and here's the thing about these resets that you're talking about. As a former treasuries trader, this is where my background is on a rates desk, trading these bonds. As a former trader, my vantage was, what is the use of the treasury security around the world? Is it used, and by whom, and to what extent? And how is it used, and why is it used? And all of these questions are answered by the power relationship between the United States and the rest of the world. It is about power. So if you are betting on a reset, a true reset, if you follow the logic there, you follow it backwards, what you're assuming is that the United States power relationship with the rest of the world is going to reset. So I think that and maybe people do believe that the US and its power relationship with the rest of the world is about to take a genuine step down. China is about to take a step up, maybe even past the United States, and that's the reset. So if your opinion is a global reset or a monetary reset even, then I would have to assume you believe China will take over the United States in that power relationship between the two countries and between these countries and the rest of the world, because it's holistic. You have to look at it like that. I do not believe that that is the case at all. So the reset isn't, it's not a reset to me from that perspective, because I believe the United States hard and soft power is and will continue to grow here over the next decade to 2 decades. It's very hard for me to think 50, 100 years. No, I see what I see now, and I see the United States becoming more powerful. So it's not a reset to me. However, for Bitcoin, bringing in Bitcoin here, the United States has made a Bitcoin embrace. And it's not just what happened in the 2024 election cycle and executive orders during 2025 and the Genius Act. It's not just that. It started near the beginning with positive IRS rulings, Commodities Future Trading Commission rulings, SEC rulings, judicial rulings. Actually, the SEC was one of the main blocks to that Bitcoin embrace, but the judicial system came in and bodied out the SEC and said, you're wrong. This is allowed. We're going to let everyone do whatever they want with this thing. We're going to embrace it. The Genius Act really starts to lock in the embrace of Bitcoin under the surface, because it is about stablecoins and power projection around the world. So it's, for me, it's not a reset because the United States is getting more powerful. Bitcoin benefits because the United States has embraced it. So Bitcoin gets an American asterisk or tag. It doesn't mean that the United States has co-opted Bitcoin. It doesn't mean that it's any necessarily less centralized, although you can argue that if you're playing semantics. But the United States is embracing Bitcoin as a technology, saying this is something that started as decentralized and non-domesticated. And while we can't domesticate it, we are going to do everything to make sure the domestication of Bitcoin can be done freely and at scale in the United States, and win on Bitcoin. And then as Bitcoin grows, the United States continues to win. That feeds back into its power projection and feeds back into the dollar system, which I don't think is going away. So it might be quite different than how other people are phrasing it, but this is how I conduct my analysis.
Yeah, a lot of people do make that comparison of pitting the United States and China, China being the rising power. But I fall along the same lines as you here, and I guess I want to get your take on this. Historically, if you look at patterns of world reserve currencies, every 80 to 90 years, there's some kind of shakeup or transition of, who gets that title. Could it be that, obviously the dollar has had that title since after World War II, but with the United States embracing Bitcoin and putting it on the balance sheet and bringing commodities like gold back to the table, could they basically be maintaining the crown for that much longer because they understand that, hey, we need these to survive this transition and remain the world reserve currency?
You said the key word, Matthew. It's the crown, and it is King Dollar. And I do agree that King Dollar is here to stay. Bitcoin is not a challenger to the dollar in the denomination sense from a global balance sheet perspective. It actually cannot be, because of the way that the credit system is designed. So my second book, Bitcoin Age, does explain this to people, that the credit system is the system that governs the global economy. That system, I don't believe, is being threatened by Bitcoin. And the United States embracing Bitcoin helps the world understand that the dollar denominated system is here to stay, and Bitcoin is an asset that you can own that can strengthen your balance sheet. But it is just that, an asset. It's not a global financial system by itself. And that distinction, I think it's good for Bitcoin. Bitcoin doesn't need to become a global financial system. It doesn't need to be the denomination on the S&P 500 company's balance sheet. It actually cannot be, because the way that the system borrows money is through the financing mechanism, which is a banking mechanism, and all dollar denominated. So I'm not ruling out a multi-decade transition into Bitcoin as the currency system, but I mean, listen, I have to teach students in a classroom you know, in person. And I can't be telling them what I think is going to happen in 50 to 100 years. That's not education.
Speculation.
And and I'm not dismissing people that do that, the big thinkers, and I can also spend some time doing that too, what I think is going to happen over many decades. But I have to write for people that want to know what's happening now, how to invest their portfolio. I have to teach students, young minds, how the system works today, explain to them how it's broken in the ways that it is. So that's why you hear me speak and really try to avoid what's going to happen in 30 to 50 years, because I don't think that serves my students and my readers a purpose. And not that I don't love to read people who are doing that type of brain exercise and speculation too. I guess that's part of good analysis.
Yeah, and it's also entertainment too when you think about the predictions. But we've only got about 40 seconds before we got to go to break. But I guess stable coins also are this other weapon that the United States has in their pocket to maintain the crown, to increase dollar demand. Is that correct?
Absolutely. I've just finished the draft of my paper with Bitcoin Policy Institute about stable coins and that power projection. And I'm really excited for people to read that paper when it comes out. It'll be out very soon, sometime in April. So I'm looking forward for people to read that, and policymakers will be taking a look at this paper and seeing, hey, we have the Genius Act. Now, how can we use it?
Good point. And when we come back, I want you to share how people can get in touch, follow your work, maybe. Good stuff. Great conversation. Guys, we will be right back after this break. You are watching The Money Block. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. Final segment of The Money Block. Appreciate you tuning in. And if you're watching, well, we're coast to coast on BizTV, and so excited about today's show. It's been a good conversation with our guests. We've been covering Bitcoin, gold, macro resets. We've been talking about this coming Bitcoin age. And our guest today, he has brought some great knowledge, great insight our way. His name is Nik Bhatia. He is the founder of the company known as the Bitcoin Layer. He's a well-known author and adjunct professor of finance. Nik, let's dive back into it, since this is a shorter segment here. Although we're not going to give financial advice, obviously a lot's happening in the world. But somebody who is maybe new to Bitcoin, maybe they haven't bought any Bitcoin, or maybe they just did. What kind of advice do you have for people who are new as we kind of move into this Bitcoin age? Is buying Bitcoin enough in your opinion, or do they need to be educated in a whole nother way?
It's a very good question, and we also, as a research firm, we avoid financial advice. We're trying to help people with their own investment decisions, make informed decisions. So what would be my advice to somebody new? Bitcoin is a long-term asset. If you see the volatility and get freaked out, and even if you've held it for a year, or this last 6 months was something that you couldn't stomach, then it might not be for you, because Bitcoin will do things to your emotions with its ups and downs that no other asset in history has ever done. And bubbles have happened in history, but bubbles burst, and then whatever burst, it dies. Basically, there is no after market, for these types of things that where the bubble bursts. Bitcoin's not a bubble because it's risen to new heights after alleged bubble burst. So it's not a bubble. Actually, it's something else. It's a new organism. And read my books. Both books are very accessible for non-financial people. It can explain to you what is gold, what is money, and how Bitcoin compares in the first one. And then the second book is, what is Bitcoin? What is it? It's a technology. It comes from the internet. It's a protocol. It has these rules. I explain it all in simple language. So you have to understand that it's a long-term asset. If you don't want to read the technicals of what Bitcoin is, that's okay. I tried to write the second book so that anybody could give it one read and understand, okay, this is Bitcoin. I don't need to go deeper into the technicals. But if you don't even want to try the technicals, take the first book and understand what is money and why Bitcoin is like gold and not like the dollar. Those are some of the basics that can help you hold Bitcoin over the long term. I think the power law relationship is underappreciated, and that's something that I'm trying to explain myself. It's not in either of my books, so it will probably be in my next one. But I do write about the power law at the Bitcoin layer for people so that they can understand what is the power law relationship between Bitcoin and time. Is Bitcoin just guaranteed to grow in value as we pass through the years? In some ways, yes. The power law relationship does suggest that. And so holding Bitcoin for a long time is the play if you are new. The volatility is there to scare you, but it's also there as evidence of this uncertainty around whether or around what it is. Therefore, the driving force behind writing books about Bitcoin, because I really do want people to understand what this thing is. If you see it as a bubble or as a hype trend, that you won't understand it, you won't capture it, and you'll come to it and then you'll leave it. And that's not the way to approach it for new people. So approach it with a long-term mindset. Don't approach it as a trade. Don't approach it as the next hottest thing. Take it seriously, and hopefully you can see that I've written 2 books about it, so I'm trying to take it seriously for you guys, for the readers, because that's my job as a teacher. My passion is actually teaching, and the writing is the product of that passion, wanting to help people.
Can you go ahead and mention the titles of those books and where people can find them?
Yes. So people can find all my work at thebitcoinlayer.com. The 2 books are called Layered Money and Bitcoin Age. You can find them on Amazon, and they're both on Audible. Great audio books, quick, 5 hours and less for each of them. So people can, in a few drives, can tackle each of these books. And so Layered Money and Bitcoin Age, Amazon, Audible, and everything that I'm doing is available at thebitcoinlayer.com.
And can they easily find, like, say they wanted to follow you on X or something like that, could they find that there at the website as well?
Of course they can. I'm on X at Time Value of BTC. You can Google Nik Bhatia and find me across all the platforms.
Well, we have about a minute. Is there anything we didn't cover that you wanted to clarify or speak on, make mention of?
In terms of the short-term movements, I think people are scared of the oil moves and the throughput to the rest of the financial markets. I would suggest Watch the dollar and volatility. That's what we do at the Bitcoin layer. We have a proprietary index called TBL liquidity, and this is our calculation of the influence over financial markets. So our indicator for our pro subscribers, this is what helps guide the short-term understanding of why it's going up, why it's going down, be able to process that yes, okay, it's dollar strength that's causing, and right now the oil weakness is causing dollar strength, but really it's this volatility and dollar influence over the Bitcoin market. So if you guys are interested in the short term and the long term, the Bitcoin layer is a great place for you to really put some numbers and some frameworks behind what moves Bitcoin price up and down the short and medium term.
I love it. All right, well, website one more time.
thebitcoinlayer.com. You can find everything that we're doing there.
I love it. Well, Nik, thank you so much for joining us today. It's been a wonderful conversation. I enjoy following you on X, and I look forward to reading more of your future work. But ladies and gentlemen, if you're watching this program, I highly recommend you download or buy his books, because he's got a wealth of knowledge, and times are changing. History is changing. Maybe for the good, maybe for the bad, but hope. I have hope, and Bitcoin brings me that hope. All right, guys. Well, we'll see you same time, same place. Thanks for tuning in. Adios.
The opinions and suggestions expressed on this program are solely those of the participants and are not necessarily endorsed by program sponsors or any station, media company, or platform broadcasting this program. This program is a product of Moore Media, LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Moore Media, LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Moore Media, LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.